What common myths exist about non-resident Canadian rental income taxation? When it comes to taxation on Canadian rental income, non-residents are often misinformed, and those myths can be costly. Whether you're a first-time landlord with a condo in Toronto or you've owned a vacation home in Canada for years, believing the wrong thing about your tax responsibilities can lead to penalties, missed refunds, and trouble with the CRA. Let's clear up the most common myths non-residents believe about rental income in Canada and explain the facts that could save you thousands. Myth 1, I don't live in Canada, so I don't owe tax there. This is by far the most damaging myth. Many non-resident landlords assume that because they're not Canadian citizens or residents, they're not subject to Canadian tax. Wrong. The CRA taxes Canadian source income, and rental income from property located in Canada absolutely qualifies. It doesn't matter where you live. If you're collecting rent from Canadian real estate, you owe tax in Canada. Myth 2, I'm already paying tax in my country, so I don't have to file in Canada. Another dangerous assumption. While you may have to report the income in your country of residence, that doesn't exempt you from Canadian tax obligations. However, if Canada has a tax treaty with your country, you may be able to claim a foreign tax credit to avoid double taxation. But you must still file properly with the CRA first. Myth 3, the tenant or property manager is handling the taxes. While it's true that your tenant or property manager may be withholding 25% of gross rent and remitting it to the CRA, that alone doesn't mean your tax situation is fully resolved. Unless you filed an NR6 form and elected under Section 216, you'll be taxed on gross rent with no deductions for expenses. Many landlords who rely solely on withholding overpay taxes by thousands of dollars each year. Myth 4, if I make no profit, I don't need to file. Wrong again. Even if your rental expenses outweigh your income, meaning you made no profit or even a loss, you still need to file a Section 216 return if you want to carry losses forward or claim a refund of withheld taxes. Skipping the return means forfeiting refunds and potentially paying unnecessary taxes. Myth 5, short-term rentals don't count. Whether you're renting on Airbnb, VRBO, or just occasionally subletting the property, all rental income is taxable, even from short-term, part-time, or seasonal rentals. The CRA doesn't care how often you rent. If you're earning money from property in Canada, you're expected to report it. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.